what I learned a long time ago was that, progression happens through hardship. And I made a goal to live my life always trying to be on the fringe of my comfort zone. So I feel like that's where I get the most progression, right? And not just progression, but like I feel the most fulfilled personally is when I'm making that forward progress. And so, I realized early on that if I can become comfortable being uncomfortable, that's a very valuable skill set.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Dave Allred is the managing partner at Axia Partners Real Estate Fund. Dave, welcome to the show.
Thanks, Sam. Good to be here, brother.
Hey, pleasure's mine, man. 3 questions I ask every guest who comes to the show in 90 seconds or less. Where did you start? Where are you now? How did you get there?
I started in a small town here in Utah called Manti. Was going to college, got recruited to go out and knock doors for a company called Vivint Smart Home out in Chicago. Went out for 4 months. Went really, really poorly. Failed miserably at it. Luckily, halfway through the summer, I kind of turned it around. Was able to stick through it and finish out the summer. Made $31,000, which was more than more than my parents ever made. It was a game changer for me. And came back next year as a sales manager and started a 17-year leadership career over at Vivint Smart Home, Vivint Solar. Really grateful for that. It was awesome. Worked for the 121 sales teams across 41 different states. Both those companies ended up going public for multi-billion-dollar valuations. And all along the way, I was just really focused on financial freedom, like achieving true financial freedom, right? Enough passive income to pay for my family's cost of living. I realized that real estate was the best way to create that as well as generational wealth. And so at age 30, I just started focusing on how to take that active income from door-to-door sales, plug it into, recurring passive income through real estate. So at age 30, I committed to getting 40 rental properties by age 40, because that gave me enough enough passive income to have that financial freedom. Committed to it, reverse engineered it, put together a blueprint. Went to work on that, hit that when I was 36, increased that goal to ownership in 1,000 rental properties by age 40. Hit that goal when I was 40. From there, I just started doing a lot of syndications, multifamily, loved that space. And then from there, the next step was to start a real estate fund. So we launched the Axia Partners Real Estate Fund about 1 year ago with a $20 million equity raise. We oversubscribed in about 2 months. And that's been received very, very well. And so we're now launching Fund 2, $40 million equity raise, launched that 2 weeks ago. And the fund's it's just focused on recession resilient passive income. So we go multifamily, apartments, self-storage, and RV parks. It's all focused on mitigating downside risk and hedging that while still creating strong yield for our partners. And so one of my goals in life has always just been to do bigger deals than yesterday, right? It's beat yesterday. I feel like as long as you're always beating yesterday and starting for that next level, you're always going to have that personal development, progression, increasing your network, your net worth, and the people you're surrounding yourself with. And so it's kind of a personal model throughout my life.
Man, I love that. That's really impressive. Tell me about the turnaround in the middle of that summer for Vivint. What did you do from sucking as a salesman to having a great rest of the summer?
Cool. Yeah. So when I say sucking, I mean, I was really sucky, man. Like I'd always been pretty successful, whatever I put my mind to. And my first week I sold one account. It was actually a sub 600 credit score, which I shouldn't have installed in the first place. So I had to come rip it out a few weeks later and charge back my $200 commission. So that was my first week. And my first month was 6 installs. Midway through the 4-month selling season, I think I was sitting around like 21 accounts, which is not great. 80% of our team had quit. What changed for me though was one of the VPs came out and gave a little presentation on how anybody that does 100 accounts may qualify to be a sales leader the next year, and they can go and recruit a team. They can work on their leadership skills and help create something bigger than just themselves. And that really, something sparked there for me. I was like, you know what, this could become more of a career instead of just this, one-time summer, experiment. And so that's really what flipped the switch for me. And then where it really got fun was more focusing on leadership, right? The next year, the sales manager, and then the top sales team in the company, and really just focusing on how can I create maximum value for my employees. And I really learned to embrace the, Zig Ziglar's, my favorite quote, which is, you can have everything you want in life if you help other people get what they want. And I realized that, hey, if I can create maximum value for these guys, it always reciprocates back. And I've really kind of live by that. Even now in the real estate game, we have 400 plus investment partners, and it's all about just creating value. Like, how do we create maximum value for our employees? In fact, the name Axia Partners, our real estate fund, is Axia is Greek for to create value, and so it's just really that focus. But yeah, long story short, it was an opportunity to become a leader and to do something bigger than myself, and the earning opportunity. So Sam, what I learned a long time ago was that progression happens through hardship, and I made a goal to live my life always trying to be on the fringe of my comfort zone. So I feel like that's where I get the most progression, right? And not just progression, but like I feel the most fulfilled personally is when I'm making that forward progress. And so, I realized early on that if I can become comfortable being uncomfortable, that's a very valuable skill set. And I think that also correlates into real estate. A lot of times the best deals, especially in a competitive market like we're in today, it's finding deals that have a little hair on them, right? A little bit of it's a little uncomfortable, right? But by being willing to take on that challenge, we can usually create stronger yields and learn a lot more through that process.
One of the ways that we talked about off air that you kind of scaled initially was by partnering with much more experienced operators. Is that still kind of your business model today inside of the fund, or are you guys building out teams that are siloed inside of each of these asset classes?
100%. So one of my mentors back in business early in my career said, "Hey, Dave, anytime you venture into a new space or take on a new space, we'll say, always identify the top 1% to 2% of people in that space and try to get proximity or partnerships with them." What that does is not only will you have the best in class, partners, but you then have proximity to their network, right? To their CPAs, to their attorneys, to their investors, et cetera. And so absolutely, yes, I think that's been actually one of the best ways that's helped me to scale my portfolio so quickly over the years is by having proximity and partnerships with the very best people in the business. When I first got started as a syndicator, I went to Joe Fairless, went straight to the best guy I knew in the space and partnered with Joe, and same thing in Axia. I partnered with the very best fund manager I could find, the best underwriter you get from Goldman Sachs, and build up this, all-star team here. And then looking at scaling Axia, instead of just doing one fund and then another fund, we're actually changed it to where we now have strategic partnerships with some of the best people in the country that specialize in, for example, in industrial. So we'll launch an industrial fund. It's with one of the top guys in that space. Here in Utah, the number one commercial brokers teaming up with us to do a Utah fund specifically focused on the Utah market. And so getting the very, very best people involved, not only does that make it more fun, but it just creates a lot of peace of mind knowing that we're not going to miss anything. And what I learned a long time ago in real estate, Sam, is the biggest risk in real estate, in my opinion, is just simply not knowing what you don't know, right? It's missing one step in the process or something, and all of a sudden you hit a pothole or you hit a speed bump, and it's hard to recover from that sometimes.
Yeah, and it's those the details matter in this space. They matter very much, and it is they have a leveraged effect both ways, where the small details can make you a lot of money, and they can also lose you a lot of money. So I think one of the things you mentioned there was bringing on somebody from Goldman Sachs on the underwriting side. I guess when administering a fund, who are some of the key people on your team that you found that you needed to add in order to do such large deals? Talk to us about the team you've had to build around the fund.
Good question, because previous to the fund, I was always a solopreneur. It was always just Dave Allred doing the entire thing, the entire syndication, the entire process. And so, frankly, it was actually a concern to me of going into a partnership where I'm going to have multiple GPs and a whole entire team. And not be able to control the whole process. I'm a little bit OCD. I'm kind of perfectionist, if you will. But in hindsight, a year later, it was the best thing I've ever done. You can only go so fast by yourself. And so having a team really does help you to scale much quicker. The key roles for a fund would be your fund manager. I have a director of investments, which is our underwriter. And now we're building that out to have a full-time underwriter underneath him, and then also a investor relations role underneath him. And then we have a financial manager for the fund, does all the books, annual audits, K1s, all of that for us. And then a director of marketing. And that's one that I think is actually very, very important as you are marketing to investors, right? So your pitch decks, your websites, even the value add business plans for our assets and how we're going to repurpose or rebrand the assets themselves. So those are the three primary ones. From there, you want to have an admin, maybe a controller in place. I think investor relations is an important role as well as you scale.
Yeah, that's those are a lot of people. Yeah, going from solopreneur to adding, gosh, I'm counting up at least 6-8 people that you're adding to the team. That's quite a change in direction there. How have you gone about, and I want to ask a few questions that are specific to each of these roles, but how have you gone about finding the talent out there that is ready and willing to join you and your team? Like how have you built that out?
Great question. So I've 400 plus investors right now, and I've never paid for a lead. I've never paid for marketing. It's always just been organic, right? It's people that I know in my social network. And on that note, I mean, and some of the people are like, well, Dave, doesn't that stress you out? Bringing in your brother, your family, your friends, and these deals. I would say absolutely, it's a heavy responsibility as a fiduciary. But at the same time, why would I not want them to come in if they're people I care about? And if I truly believe in real estate, I truly believe it's the best way to create generational wealth and financial freedom. Why would I not want the people I care about coming into these deals with me? With that being said, same thing on my team. It's always been organic. It's more, I think, reputation and past performance and track record. And when you just you know exactly what you want to build, and there's a lot of intentionality behind it. I've just found that things just come together, man. But the key is having a real clear idea and a vision of what you want to build, and then just putting it out there. Social media is a very powerful tool. It's a free resource. I think it's something that if you can clearly communicate what it is that you want, what you need, naturally things just come together, man. I mean, we do a little bit on LinkedIn, ZipRecruiter, to find some of this talent. I'm very lucky to have our fund manager. His name's Adam. He's a Stanford, only person ever with Stanford, and also JD at Harvard. And so he has a very connected network of very, prolific, very experienced real estate professionals. And so it's been easy. Again, it goes back to that work with the top 1% to 2% of people, right? Their network, their proximity, they just know people. And so if you get the very best people as partners, naturally, it's going to be pretty easy to build out a best-in-class team.
Right. No, I think that's really, really key. Talk to me a little bit about the underwriting side of things. I think it's always interesting when you hear of somebody in a fund like yourself, or I've talked to some advisors and some other people that they basically take all of the sponsors' decks and all the sponsors' information and turn around and re-underwrite it themselves. Is that kind of what you guys are doing?
Sorry, I didn't quite follow what you mean there. They take somebody else's deck and write it?
You're going to take the information from your sponsor, because one of the things that you guys are doing is finding the top best-in-class people and partnering up with them by allocating large chunks of capital to their deals, right?
Right.
But but you're also doing your own underwriting, which means you're taking the data set they're giving you, and independent of how they've underwritten it, you're underwriting it again yourselves.
Absolutely, 100%. And I'll say this, Sam, on underwriting. I love real estate, man. Everything about it except for the underwriting. Right? That's the one thing that I get no energy from. And so I really do try to hire, again, the best in class underwriter I can get on the team, and really just trust him to do that. But we absolutely underwrite every single deal, no matter what the pro forma is. To me, usually pro formas are BS anyway. I mean, it's not something that I would never do a deal or close on a deal just based on somebody else's packet they gave me. Right. So we want to look at the assumptions. We want to make sure it's conservative. We want to make sure that all the data is up to date and checks out for our model, what we're looking for. And with our model, again with Axia, it's such a competitive market right now. And I see so many other people's decks right now that are very, very loose assumptions, in my opinion, that frankly speaking, in my opinion, being that we're 12, 13 years into this incredible housing run, it's irresponsible to assume that it's going to be the same in the next 5 years, next 3 years, 5 years, 7 years, or even close to that, right? And so our underwriting is extremely conservative, in my opinion, and that's what we want. I mean, we want to be able to always overperform and over deliver, under promise. And so, but yeah, we always underwrite it, and he does a fantastic job on that one. At the end of the day, real estate comes down to numbers. It's simple math, right? Doing real estate the right way. But it is so competitive right now. I would say, share this real quick. We're big on value add, right? A lot of people are in the space right now, but I think value add really helps insulate from a downturn, or when there is. It's not a matter of if, but when there is a correction or some choppy waters ahead of us. And so really being great at value add is important. And one thing that we do with Axia is it's not just a traditional value add of putting, lipstick on a pig and putting some new paint, some granite countertops in. It's all that, but it's also a more innovative approach with working on search engine optimization, social media presence. A lot of these assets in today's commercial real estate market have no online presence or no social media presence, which is kind of crazy to me. Going in and adding dog spas, not dog parks, dog spas, putting in WeWork type shared office spaces or renovating units to have a little break, a little cubby office space in the units. So just a more of an innovative approach than what we see in the market traditionally.
Yeah, no, I think that's absolutely great. What are some deal types that you guys are flat out saying no to right now?
A lot, man. I mean, a ton. We're big on net positive migration. So we study the U-Haul data points every month, every quarter. And so we'll only go into states which are positive net migration. Love Florida, Tennessee, the Carolinas, Georgia, Utah, Idaho, Nevada, Arizona, Texas, obviously, and also we actually won't go in. Those all happen to be red states. And it's not really a political thing. It's just, we can't control rent evictions or rent control or eviction moratoriums and stuff like that. And so we want to go into markets where they embrace the free markets, right? Because that's something that we can't control that. If the government's going to come in and say they're going to interrupt the natural flow or the natural markets, that's a big concern for us. So we only go into those markets, high positive net migration, red states. And then, again, I think that the value add is such an important component right now. And I think it's really important that we're always focusing on how to mitigate downside risk. What would we say no to flat out? Quite a bit. So each one of our funds has a specific investment thesis, right? So our first one was a cash flow focused fund. This fund today is more of a development fund. And so we have the ability to go into industrial, even to do some ground up commercial. It's an interesting question. I would just say what comes back to me is it's all about mitigating downside risk. Warren Buffett says rule number one, investing, don't lose your principal. Number two, don't forget rule number one. And so it's always okay, in a worst case scenario, how bad could this deal be? And going into with that approach. And again, it in real estate, sometimes it's just what you don't know is your biggest risk. And so I think that if you go into it with your eyes wide open, you can actually mitigate so much of the risk in a deal by having the foresight of looking at it very critically and what could possibly go wrong with this opportunity.
Yeah, I love that. Last question here for you is when you talk to investors and they recognize that you are a fund that invests in other opportunities or other well-known sponsors, why would they choose to invest with you versus just going directly to that sponsor?
Great question. So first off, I would say, the reason why I went from the syndications into the fund world was mainly because I started investing into funds and I realized that, for some different data points, it's 2.7 times less risk in a fund because of versus an individual asset because of the diversification that a real estate fund creates. So again, a much lower risk profile on a fund structure. And then just the compound effect of how a fund is structured correctly, where you can reinvest those proceeds, over a 5 to 7 year period. That's a beautiful thing. We can get that compounded effect going. And then just to be able to help a lot more people. My syndications, I'd only have, 5 to 20 people coming into a syndication. Now I can bring in hundreds of investors and create maximum value for them. So that's probably the biggest reason. I think funds make even more and more sense as we go into some choppy waters ahead where the economy might go. So anyway, and then lastly is because of the passive nature of it. I think that a lot of people there's a lot of money in the markets right now, but a lot of people want to be more passive in their approach and they don't want to go and own their own real estate. Right. So for us to be able to create a truly passive opportunity where we literally just, hey, if the deal fits your investment thesis, the workload is filling out subscription documents, sending a wire, and then the end of each year, sending a K-1 to their CPA. That's literally all they have to do. Now, Sam, I just want to mention the one thing that I'm really proud about with our fund, it's very unique from what anybody else I've seen in the market, is the motto is experiential investing. And what that means is we're very committed to education and creating not just a strong ROI, return on investment, but also an ROE, a return on experience. And I feel like that's very valuable. And so once a month, we have a webinar with all of our partners, and we have the best guys in the nation coming in and speaking for an hour. When we do a site visit, we let our partners come and walk with us. When we do underwriting, we close on a deal, we give a webinar. We go through the entire process on the underwriting, on how we source the debt and how we're going to manage it, our business plans for value add. And that's been received very, very well, because I think that most people want to be doing large commercial real estate. They want to be doing these type of deals. It's just a lack of confidence or confidence. Right. And so anyway, I call it experiential investing. And last thing on that is I believe that experiences are the new economy. I think people are willing to pay for experiences, whether it's millennials or baby boomers. Like, people want experiences. And so the more we can create experiences around our real estate, then the better it's received. And in my opinion, the greater NOI we can achieve as well.
I love it. Dave, thank you for taking the time to come on today and break down a really cool business model and just share your experience here with us today. It's been lots of fun. If our listeners want to get in touch with you or learn more about you or your funds, what is the best way to do that?
I would say I'm most active on Instagram. So it's just Dave Allred. It should be pretty easy to find. With Axia, it's axiapartners.com. And my email is dave@axiapartners.com.
Dave, thank you again for your time. I do appreciate it.
Thanks, Sam. Appreciate you, man.